Which are the 7 potential risks of buying property abroad? Looking overseas, you can realize that there is always investment opportunity everywhere. As with all investments, there is always some risk when investing in real estate. However, you can minimize your risk while maximizing your profit by making an intelligent investment in something that will always be an asset with rising demand. Housing shortages, global population growth and increased tourism are some of the factors contributing to these ever-growing needs and increase in demand. Buying property abroad, especially in good locations, like London, means you are making an intelligent investment. If you are buying property abroad to let, you will also yield the benefits of an additional monthly income that could give you even more financial freedom. Property is a long-term investment, and you can mitigate potential risks. Understanding the risks and rewards coming from buying an investment property abroad is just the start. Risk number 1. Real estate is far too illiquid. Property is taking longer to sell, making it difficult to access your money quickly. Knowing how to invest in real estate isn't like other financial assets that you can jump in and out of when the mood strikes you. There are no quick cash-out options, and you must factor in the uncertainty surrounding buy-to-let opportunities in your decision-making process. If you find yourself in a situation where you need quick access to your money to invest elsewhere or to take care of unforeseen circumstances, you might run into some delays and difficulties. Risk number 2. Fluctuations risk in the foreign currency. A critical caveat of stepping into the property market in a foreign country is that you will need much more initial capital to enter the market. Additional costs beyond the initial purchase price, such as repairs, compliance certificates, building and pest inspections and more are just some of the things you should examine before making your final decision. Do not forget that exchange rates fluctuate rapidly, which could change the value of your purchase. Take the time to fully understand what a change in the exchange rate could do to your mortgage repayments and total property value. If the foreign currency keeps falling, or your home currency continues strengthening, it will gradually wipe out whatever income or profit you have generated from your overseas property. Risk number 3. Taxes. When you buy a property abroad, you will be liable to pay in that country, along with the tax that you'll be paying in your home country. The amount of tax that you'll need to pay will vary from place to place, so it's best to do some thorough research. Each country has its own calculations on property taxes which can be different for local and foreign owners. Find out how it works and how it affects the income from your property. Risk number 4. Evaluate the risk for letting troubles. If you're thinking about buying property abroad for buy-to-let purposes, be aware that evicting unruly tenants is a lengthy process. And, if your investment stays empty for an extended period, you may not turn the desired profit. Only focus on properties that give the biggest upside in value, for the lowest risk. If you are willing to look beyond your home borders, you really can have your cake and eat it. So, you must evaluate the risk for letting troubles and vacancy, for unexpectedly long periods. Risk number 5. The real estate industry is saddled with a poor reputation. A big problem is that there are few honest people in the real estate business. Many people make a living out of scamming people, especially foreigners. So, choose countries you are treated best and don't be afraid to walk away from a deal, if you're uncomfortable with all the aspects of the purchase. Risk number 6. Understanding the local language. Make sure you do not have problems understanding the language or getting yourself understood, communicating with the property agents, the management office and the lawyer. How about negotiating with local contractors to get renovation, read the fine print in a contract, or repair work done? Risk number 7. Political stability. A foreign country may be politically stable now, but real estate is a long-term investment. You want to understand what the political climate has been over the last decade or two, as well as in which political direction the country is headed. In most cases, political stability is a medium risk in Latin America, and a low to medium risk in Europe. In Asia, It's more of a country-by-country consideration, but the places in this region where you should be looking to invest right now would qualify as medium risk or lower. Though these are risks that you will need to consider, they are relatively easy to avoid. Taking the time to carefully navigate the steps of buying a property overseas will go a long way towards ensuring that you avoid potential problems. Thank you for watching the video. If you watch all my lectures, you may be able to start investing in rental properties a little quicker. Please subscribe to my channel and press the bell to get alerts when a new video is posted. Please write your comments, questions, or concerns you would like to share.